Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, May the 30th. The year's 2023. Let's talk trading. Trading with Walmal. These videos are for educational purposes. Your results may differ from mine. Had a trader wanted to see a H4 trade that I've been talking about, and basically it's just the wick zone of H4. Let me bring up a chart here. This is off of the pivot trading plan, but not that I'm using that in this particular trade, but just showing the H4 candles. You can see right where the open of the H4 is, which is pretty much the close of the previous H4, and you can see we're in this wick zone. Just so happened we touched R1 and it's pulling back. So basically you can put pending orders either to go short at the open here or long at the previous candle's high, and that's pretty much the trade. You can see last H4 candle, if you would have taken that trade and you would have made a boatload of pips. You could have probably made almost a week's worth of pips there.
Yeah, that's the thing about H4 trades. If you're trading that and you've got the wherewithal within your mindset and personality and psychology to stick to it, man, you can rack pips up. It's just because those H4 candles, I mean, they move, and when they move big. I mean, I'm just looking at right now the chart, or the smart range for H4, and just going back the last four candles, we've got 78, 52, 36, and 20. At least your broker may be different than mine.
We're pretty much the same.
But it's just those are boatloads of pips, and you think about it. Okay, H4, 4 hours, right? 4 times 4 is 16 hours. So basically in 16 hours we had a travel of 120, 140, 180 pips, and meanwhile the range for the entire day was 120. So that just tells you your travel distance is very, very nice on the H4 because you're more than what the travel is for the entire day. So it's one of those things where you can, if you do it, you can make lots of money. Now the question is, how do you do it? And that's, I think, I know, you've said it before in the past where, people have asked questions about it, and how do you do it? Well, how do you do it? All you're doing is you're basically drawing a line in the sand, and you're just saying, if it crosses this line, I'm going to take the trade in that direction, and I'll take it until it stops moving in that direction.
Yeah.
At least when I've traded those type of trades.
Yeah, it's basically wick zone trades on H4. It's pretty simple. When I pulled up that other H4 chart, just so happens you've got you were at R4 for the day. That's a rare occurrence. So if anything, price hitting R4 on a daily, you definitely want to start thinking short.
Right.
And
yeah, I mean, go ahead.
I was just going to say, it's once again, that's statistics. So you can see here, if you even break it down to M1 and you look left, you can see the congestion area. It just put in a 1 ball. And so now I would just be looking for shorts. And we just put in a new 3 ball. And so now we got a whole new ball game here. We're 14 pips off the current daily high. So we're in that rat zone. And I'm just sitting waiting for a signal to say, take me short. But
right.
On the other hand, if you would have taken that flip-flop box trade, you'd be up 4-1 to the long side.
And maybe this will help there's some folks out there. You had said something, and I think this sometimes confuses people. You said you're just waiting for a signal. What do you mean by waiting for a signal?
A signal to go short. In this case,
how do you define that?
Oh, well, signal would be probably I would look at my multimeters and there'd be a bunch of red or magenta up there. So example, price would be under the indicator 2. I have a red candle. I might even have a flip-flop box. I might have a state change. Various signals, but just something to say, okay, I want to go short here. Or I might just say, you know what, I think it's going to go short and just do an airball trade, because once again, if you look left, you can see we're right at that previous one ball, and now price is starting to drop. Or I might say, you know what, this is going to go from fib line to fib line. So I might take the short, say at 34, look to get to 31. Or I might say, you know what, maybe it'll even do a 50% retrace and come all the way down to the 26. So,
Right.
yeah, so signals can be whatever method you're using to get into the trade. So, or it could be
So
even,
essentially,
yeah, go ahead.
so essentially, what you're saying is that you're not changing your method up, and just by trading in H4, you're not changing your methods up or your way of trading. All you're saying is that, hey, I'm at an extreme right now, and because I'm at an extreme right now, if I get a signal that goes and tries to either expand that extreme or the other side of it go and actually bring that extreme back to a median area, I'm going to take that signal because I got a high probability because of that H4, being able to go and work in my favor. And what I mean by an extreme, in other words, if we're sitting there with an H4, that's sitting there with, I don't know, let's say, 70 pips or something like that, or 78 pips, well, that's 97%. Well, the likelihood of that going further, in that particular direction is pretty slim. Could it happen? Absolutely, it could happen. But I want a really good signal to go and take that trade going in that direction. More likely, I'm going to say, hey, it's time for reversal. If we were in a H4 and we're in the last hour of the H4, we've moved 90 something pips or 80 something pips. I know I'm in the 90th percentile, and I get a signal to go short. And it's sort of like, that's probably a good place. Yeah, I'm going against the trend of that H4, but there's a good chance it's going to go and at least try to mitigate some of that run up. And, and part of that is you got to remember the reason why that happens. It's story time. So who knows if it's really true or not, but it's a story that kind of makes sense. And that is that when, let's say the market's moving in the upward direction, there are a lot of people that got left behind below that have stop losses below. They're really underwater. And so what the big players, they get caught in that too. And so what they'll do is they'll start selling the market off a little bit to try to, get the market to come down a little bit. You and I as, retail traders, we could never do that. But, big players, they can certainly do that. And so there's a reason for that to go and maybe drop 5, 10 pips. Maybe they only need it to drop 5 or 10 pips. Well, that's 5 or 10 pips that we may be able to go and take advantage of.
Exactly, because if you look at the H1, there's a huge imbalance when it shot across the 2380 line, and just kind of waiting for that to come back.
Right.
And then and if you look at H4, you can see we're way above indicator 2 on the H4.
Yeah, that imbalance is it's 40 pips. That's a lot of pips.
Right.
And like I was saying before, there's people, people who are, this is kind of funny saying it this way, but there are a bunch of people who are unbalanced in that area, But, and they need to go and, try to get that market back down there, and so there's some pressure to get it down. They don't need, and the thing is, let's say they went in, at some price, like, I don't know, let's just grab a price of, they got in at 2403, something like that. They don't need price to get all the way down to 2403, because if they go and short it up there and they short and they short and they short, by going and doing that, they may not have to get it all the way down to 2403. They may be able to get away with just getting it down to 25. But the thing is, from where we are right now, that's 12 pips. It'll come down, and there's lots of room for us to go and make money there. So what do? You're looking for that signal to go short. You're using the H4 as your candle that's telling you what's going on in the market. And it's not a bias. What it is just giving you an indication of what's happening. And a bias is, I define this differently, because a bias is sort of like, my bias is I'm going short because of A, B, and C, whereas I'm using this slightly differently, and the slight difference is, hey, I've seen what this candle or these candles have done in the last, couple of H4s, okay, and it's time for the market to start turning around a little bit. So it's not really a bias as much as it's an indicator to you as to what may happen.
Right. And as you can see, we're steadily going up here, so it's like, different rules of thumbs. Don't trade against the H1 or M30 candle color. You pick one of those. You don't trade against indicator 2. It's been aqua for a while here, a few bars.
Right. Yep. And the thing is, that's why you use your methodologies, because, my opinion, I think this thing's going to come back down a little bit, just based on what H4 is saying to me. But at the same time, if I'm using flip-flop boxes, my rule is use flip-flop boxes, the indicator 2, and state changes. Well, guess what? I haven't had any reason to go short. Since we've been on this call, everything is, there's no reason to go long either, but I don't have anything that's telling me to go short. So my idea of going and playing the H4 it's just not there. So my guessing would be, okay, let's wait until we get all the way up to, 46.6 and see what happens up there. Why 46.6? Because that's the top of that previous H4, the top of the wick, and, there's something's going to happen up there. It's either going to exit that wick zone, okay, which is a high probability type of thing that'll happen, or it's going to sit there and bounce off of it and go back into the wick zone, which I don't know. What am I going to do when it gets up there? If I'm playing H4 candles and using that to help me make decisions, I'm going to get up there and wait for it and wait for it and wait for what it's going to do. I'm going to go trade what I see.
Yeah. And there was a short opportunity just now at the 36.
Right. Yeah. Mine would have been, difference of brokers. Mine was at 37.1, and you could have picked up, a pip and a half, something like that.
Yeah, mine was.
But then again, see, for me, I still wouldn't have had a trade. It's just purely flip-flop box, and a state change. Then yeah, but I was not below my indicator 2.
I was below indicator 2. Yeah. Right now, be worth 4 pips. So
right.
So that was, there was an indication that, I'm thinking this thing's going to want to come back, and it's already done a, better than 23% retrace. So
right.
Just, taking the fact that it was, if you look at H4, it's up in that wick zone. And the previous had put in a 2-ball. Price was struggling. You had said if it got up to that 46 level, you were looking for something to happen. And I'm looking at M1 going, okay, what just happened? We had, state change, indicator 2, flip-flop. You take that trade and it would have paid off, 2 or 3 pips. And now if you hadn't taken those pips, and market would have taken it back. But there was 2 reasons to get out of that trade. 1, the 23% retrace, and 2, there was a 1-ball in the way. And you know what, Walmal? Fastest 15 minutes in trading's just about up again. So I hope that helped the traders who were considering or using H4 wick zones to place your trades. And once again, that wasn't a wick zone trade because we didn't hit the top of the previous candle or the high of the previous candle. But within that zone, we did find a trade. So remember, It's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.